According to a recent study, divorce rates doubled for Americans aged 55 to 64 from 1990 to 2021 and tripled for those 65 and over during that same time. Divorce is a challenging and emotional process, but it's crucial to address the financial aspects with care. So, if you are a baby boomer going through a divorce or simply looking out for a friend who is, here are some items to consider during this life transition. My name is Larissa, and if you're new here, I help folks 55 to 63 gain clarity on complex tax and financial planning subjects. Things like making smart decisions about your investment accounts, showing you ways to potentially reduce your taxes during retirement, and making plans for how you want your wealth to impact your kids and your favorite charities. The first and foremost consideration is understanding your assets and debt. Baby boomers often have accumulated various assets over the years, including retirement accounts, real estate, and investments. Take the time to create a comprehensive list of all of your assets, including, most importantly, their current values and how each item is taxed. Is the asset taxed at ordinary income tax rates, capital gains rates, or is it tax-free like a Roth account? Understanding your assets serves really as the foundation for an equitable distribution during your divorce proceedings. Evaluate and address any joint debts you may have with your spouse. Establish a plan for how these debts will be paid off. Understanding your joint financial obligations is essential to avoid any negative impact on your credit and overall financial health. Now, let's shift our focus to an often overlooked aspect, maintaining cash flow during your divorce. The financial strain of a divorce can be challenging, but understanding and planning for cash flow issues is critical. Here are some key considerations. Do you need to create a spending plan and monitor income and expenses while your divorce is pending? This is a great first step to understand cash flow so that you then can create a new realistic spending plan for yourself that reflects your new financial reality. Factor in changes like living arrangements, potential alimony you may receive from your spouse or pay out to your spouse, and adjustments to your monthly and daily living expenses. This will help you gain a clear picture of your cash flow needs during and after divorce. If needed, consider negotiating temporary support arrangements with your soon-to-be ex-spouse. This can help ensure that both parties have the financial means to cover necessary expenses during the divorce process. Temporary support can include provisions for housing, utilities, and other essential costs. Next up, let's talk about retirement accounts and pension plans. These are significant assets for baby boomers, and divorcing spouses may be entitled to a portion of each other's savings. It's crucial to understand the implications, early withdrawal penalties, and the process of splitting these types of assets. Social Security benefits are another important consideration. Social Security benefits can be so confusing. There are several important and unique issues that must be considered before filing a claim to collect Social Security benefits. If you are married for at least 10 years, you may be eligible to claim benefits based on your ex-spouse's earnings record. Be sure to stick around to the end of this video and I'll share how to get a checklist of all these different issues to consider when it comes to a divorce and one specific checklist for Social Security planning. Let's shift our focus to health insurance. Many baby boomers that are still working rely on employer-sponsored health insurance, and a divorce can disrupt this coverage. If you are on your spouse's healthcare coverage through their employer and the employer has at least 20 employees, you can elect COBRA continuation coverage and stay on the plan for 36 months after the divorce or legal separation. If you are employed, but not using your employer's coverage now, you may have the ability to enroll in your employer's health insurance plan during a special enrollment period as a result of the legal divorce or legal separation. Now, if none of the above apply and you will lose your coverage due to your divorce, for Health Insurance Marketplace, you have 60 days after your divorce to enroll according to special enrollment period rules. Lastly, let's touch on estate planning. Divorce necessitates reviews and updates of your estate plan. This includes revisiting your will, trust, and beneficiaries. It's important to make these updates to your documents to reflect your wishes after your divorce and ensure that your assets are distributed at your passing according to your new preferences. Well, this wraps up my high-level overview of the financial considerations for baby boomers going through a divorce. Remember, seeking professional advice and staying informed about your financial situation are key to making sound decisions during this challenging time. Be sure to check out my links for a checklist on these issues and many others to consider during a divorce and a flowchart that gives you guidance on if you're eligible for Social Security benefits after a divorce. Remember, a secure retirement starts with planning. Wishing you wealth, health, and happiness. If you found this information helpful, don't forget to like and share this video. Until next time, stay financially fit.